we're going to do part 2 of chapter 1's lecture. So let's go ahead and get back into PowerPoint. We left off here. So the next thing we need to talk about, which has become a pretty important topic in the world of accounting, is ethics. So in the not too distant past, we've had a lot of financial and accounting ethical issues. In the late 1990s, early 2000s, there was a rash of accounting and financial fraud cases. Enron, I don't know if you've ever heard of the company Enron, is the prime example of that era where there was massive amount of accounting and financial fraud going on, which very much hurt our financial markets and our economy as a whole. And then relatively more recently would be, of course, the big mortgage meltdown that we had in the mid-2000s, which both of those situations were largely due to outright illegal or unethical behavior. And so we definitely really want to focus on ethics, especially when it comes to accounting and finance, because of all the issues we've had in the relatively recent history. And so it's really tough for me to talk about this because, I mean, ethics is your sense of right and wrong, which essentially is what ethics is kind of been determined when you were quite young based on the role models and what you learned when you were young. But within accounting, there is definitely an official rule book that we will follow. But as with any rule book, there's always some gray area or something that was not anticipated or thought about. And so when those situations arise, you basically need to use the accounting rule book as a guide in helping you to cover that particular circumstance. I'm going to make an analogy later that basically the accounting rule book kind of works like our government, our federal government works. We have the Constitution, which is this overarching document we created that sets forth all the values we want to try to achieve in this country. And a lot of the items in the Constitution are relatively vague. They're not very specific and detailed because they encompass overall values and ideas, things we're trying to achieve. And then from there we have very specific laws, and all those laws reference back to the Constitution. Laws, on the other hand, are very detailed. They're very specific situations. And so you're going to find that the accounting rule book works in a very similar manner. We have the overall Constitution, if you will, these overriding principles and values we want to achieve in accounting. And then we have very specific rules that reference back to those. And so whenever you find yourself in a gray area of accounting or finance, really what you need to do is focus back on that Constitution, if you will, the overarching or overriding goals we're trying and values we're trying to achieve, and let that guide you in those situations. All right, so the little diagram here shows that you need to identify that an ethical concern has taken place. A lot of times it's like a gray area or an area where there's no specific rule. You want to analyze all your options, and then you want to use your ethics and referencing that Constitution, if you will, of the accounting guidelines to help you make the decision that that is best for all involved, all people potentially using that information. How would they be affected by it? And so you want to take that into account when you make any kind of decision. So ethics, very important topic. That maybe the discussion question I'll create will have something to do with that, because there's definitely some stuff that has taken place that warrants some further review. Now, what kind of elements cause people to commit fraud? They usually call it the fraud triple threat, I think is what they call it, or the fraud triangle here. There's 3 things that need to be in place for fraud to take place, and that would be there's an opportunity to commit fraud. So where there's a loophole in the system that allows someone to kind of exploit the situation. Then there's financial pressure. That individual that would commit the fraud is feeling some kind of financial pressure that we all do. We all face financial pressure. Even if you're super rich, you do face financial pressure. And so that's kind of why we might exploit a loophole and take advantage of an opportunity to commit fraud. And then we have rationalization. And that is where, even where good people, you define someone as a good person, they may rationalize committing fraud in that, oh, maybe, no one will find out, no one will get hurt by it, I'll replace the money I stole, whatever. The people will rationalize their behavior. And so we're going to end up talking a lot more about fraud and what are called internal controls, which are things in place to help prevent fraud. And so we'll revisit this fraud triangle. But these are typically the three things that are in place when someone's going to commit fraud. All right, so I mentioned the rule book, right? So accounting is like scorekeeping. Well, there is an official rule book for accounting. In the United States, we follow what's called USGAAP. GAAP stands for Generally Accepted Accounting Principles. It is our rule book, right? Now I mentioned it's kind of set up in two parts, right? There's the Constitution piece, which is kind of our overriding goals, and then we have very specific rules, which are called principles. And so that's this slide kind of shows you that concept, right? So the overriding Constitution, if you will, is something we're trying to achieve here, which is what qualities do we want our accounting information to have for people to be able to use it, okay? Make it useful information. And so that's these three items here. We want that information to be relevant, reliable, and comparable. Relevant information basically means that the accounting information we provide can impact a decision in some way, shape, or form. And so we only want relevant information in our financial statements. We want the information to be reliable. People have to be able to trust the information, that it's truly reflecting how the company performed. And finally, we want comparable information, which means basically that all companies are using the same set of rules to prepare their information. That way we can compare the performance of this company to another company. If the information or if companies weren't using the same set of rules, it'd be very difficult to compare performance, and therefore it'd be hard to make decisions, right? So if you're trying to compare, just to give you an analogy, if we were trying to compare a soccer score to a basketball score, it'd be pretty hard to do, right? Because they're totally different games, they have totally different sets of rules. And if each company can kind of decide how they prepared their financial information and however they wanted to, it'd be very difficult to compare the performance between companies because they're preparing their information on entirely different sets of rules. So we need the information to be comparable. We all use the same set of rules. And so these three qualities kind of dictate how we come up with specific accounting rules. This is kind of our constitution, if you will. The information needs to have these qualities in order for it to be useful to people using that information. Decision makers. Now, who sets those rules in the United States? That would be the FASB, the Financial Accounting Standards Board. Actually, if you go back and look at the history, which we're not going to do, there's been several groups that have set the accounting rules, but the current one is the Financial Accounting Standards Board. Interesting thing about the FASB, it is a private organization. It is not part of the government, and they have the authority to make accounting rules. Another organization would be the Securities and Exchange Commission. That is a federal agency that has oversight over all publicly traded companies. Publicly traded companies are ones who sell ownership on an open stock exchange. So that would be like a company like Microsoft. If you or I wanted to become part owner of Microsoft, we'd simply get a stock brokerage account, buy some Microsoft stock, and we'd be part owner. Any company that sells its stock, by the way, stock is the form of ownership for corporations. So if you bought the stock, you become part owner. anyways, the SEC has oversight over all publicly traded companies. Finally, another group that we're not going to get into a lot of detail on, just to mention them, is the International Accounting Standards Board. There is a big push to create one seamless set of rules across the globe, which would make more sense because it's difficult currently to compare a company that's based in, say, a European company to a company based in the United States, because we do have slightly different rules. And so there's a big push to internationalize all the accounting rules. That way you can compare and contrast companies' performances across the globe. So the IASB, the International Accounting Standards Board, is the one that's coming up with that set of rules. The United States has not yet adopted that yet, but at some point down the road, we will. I'm not going to get into the specifics here. I'm actually going to skip these couple of slides here. This kind of talks about those international standards, but if we haven't adopted them in the United States yet, we're going to go ahead and skip that. All right, it probably makes sense to go ahead and take another break now. I'm going to have you work on quiz question number 2 in that quiz that you worked on a minute ago. Or again, if you want to wait until the end to do all those quiz questions, you can do that. Now.